Hey, good afternoon, everyone, and welcome to the 8th Annual Laurentian Bank Securities Institutional Investor Conference. My name is Nick Agostino, Head of Research and the Diversified Technology Analyst here at Laurentian Bank. Assisting me today is my associate, Solomon Rana, who will be helping me in the background to moderate today's fireside chat. Before we begin, some housekeeping items. Please ensure your microphone is on mute and your camera is turned off during the presentation. Please ensure your name appears on screen so we can properly address any questions you may have. Also, we will pause during the course of today's chat to take any questions. Should you have a question, either use the chat function at the bottom of the screen or the raise your hand feature, and we will get to your question as soon as we can. Please remember to lower your hand once your question's been answered. And if you have any technical issues during this call, please use the chat function again to communicate, and we'll try to correct as quickly as possible. Finally, we've also added a little guide at the bottom of your screen on the bottom right with the ticker CGY for Calian, and that's just designed to help navigate you through today's conversation. So with that, we'll get started. And so welcome, I want to welcome on the screen Kevin Ford, the President and CEO of Calian Group. So welcome, Kevin.
Thank you, Nick. It's nice to be here. Thanks for including us in your conference. I hope it's going well.
Our pleasure. So getting right into it, looking at advanced technologies, MDA recently filed a prospectus where it stated that it's aiming to quadruple revenues over the next 5 years in the space industry. And given the fact that there is a contract and partnership relationship with MDA, how do you see Calian going along for the ride when it comes to what MDA has on their growth plans?
Yeah, thanks. And again, congrats, to MDA, another great Canadian-based company. So it's always nice to see those type of organizations doing well. So from my viewpoint, we've had a long track record with MDA on many different programs. We just, as you saw, recently announced to work with them with the Canadian Space Agency. So there's no question that we will continue to look for opportunities to work with MDA. They're a great company. We have a good relationship, and it's been based on not only bidding, but actually delivering successful programs in the past. So I believe confidence goes both ways in our ability to work together. With regard to space generally, I think it's interesting with their comment. I get the question often about space and opportunities, and I think you see their perspective. I still believe there's lots of opportunities in space, and whether it's working with MDA, working us independently, or other partners or other Canadian-based companies, we're still pretty excited about the space prospects for sure. So absolutely, we look forward to working more with MDA, but as importantly, we will continue to work with other partners, or frankly, pursue directly these opportunities when it makes sense to do so.
Okay, and then I think in the past, if I recall correctly, you were involved in the U.S. market. I think you kind of retrenched, and on a recent call, you spoke about kind of wanting to go back into that marketplace and expanding your footprint within Europe as well. So maybe talk to us about the timeline and what your strategy would be when it comes to the advanced technology to go into the U.S., expand in Europe, and what opportunities you think you can leverage specifically on the defense and aerospace side when it comes to those initiatives?
Yeah, great question. For us right now, when I look at our geographic footprint as Calian, obviously a European footprint is growing, both for advanced technologies, our learning business, we've had 2 acquisitions there. And in the US marketplace with our recent acquisition of Intertronic, who have a lot of US-based customers, defense OEMs, NASA, the US is now clearly back on our radar, if I can say it that way, no pun intended. So what we're doing is we really want to, whatever geography we pick, we really want to build the business and then build the infrastructure underneath it. So in Europe's a great example now with SAT Service, CTS and Cadence, who we've acquired, all of them are growing very well. And we're looking now to put more investment and continue to build more infrastructure, whether it's offices or more talent in those regions. And for the US specifically, you're right. We were in the US years ago. We were involved with a defense program that required a foreign-owned controlled interest, a separate board, a lot of governance, frankly. And from my viewpoint, it didn't warrant the amount of governance for the amount of business we're doing there. So hence I broke it up and sold it. So we continue to service US customers today. And I think shortly in the next 12 to 18 months, we will definitely be looking to reestablish a physical footprint in the US to help support our growth objectives, whether it's on the defense OEM or organizations such as NASA. So stand by, we will definitely be doing so. And in the meantime, we'll be focusing both on Europe and US going forward, as well as our domestic footprint here in Canada.
Okay, and then obviously 5G rollout is now starting to hit the marketplace. In future, I like to think of it as XG, but nevertheless, there's that avenue playing out within your advanced technologies arena. There's constant satellite launches. OneWeb went into bankruptcy, came back out of it, and the idea of creating constellations to provide internet access as another means, and certainly within remote areas, is something that has some good industry trends. How are you positioned when it comes to, call it XG, and taking advantage of the internet access from a satellite perspective?
It's an interesting question, because as I thought about it, I live in Ottawa, south of Ottawa, and literally within 10-15 minutes from Ottawa, you have to go on to some pretty horrible internet services. So I think we forget just how rampant it is still, the inability to connect. I bought a cottage recently, same thing. The download speeds are abysmal. So I think that Internet of Things, the connectivity, whether it's for entertainment, whether it's for just IoT devices. So the good news from a Calian perspective, the demand for bandwidth, however it's delivered, whether it's through satellite communications, 5G, is all good news for our Advanced Technologies Group. Two reasons. Number one, as you look at LEO, to your point, the low Earth observation satellite constellations, Telsat, OneWeb, all these organizations that are basically competing now to get that installation in place to compete with fiber and ground-based infrastructure. 5G, where we've done research and development in certain elements of 5G, and we're really trying to play, we're not trying to pick favorites, we're trying to pick open architectures in our development so that we can be relevant regardless of the platform. So a lot of the work we're doing right now with our research and development is tied to how do we be relevant in LEO and how do we be relevant in 5G ground infrastructure. And I'm happy to report we're making progress in both of those. And discussions are happening daily with different organizations about what role we can play in that. Clearly, our ground system business, our RF ground system business, is still the core of that business. And there's still a lot of demand on that. And I think some people forget that sometimes. The legacy global Earth observation, medium Earth observation satellites are still relevant and very relevant. And as they get more fidelity and more capacity, I don't think they'll be abandoned. So I think you've got to, as an organization like Calian, be able to service GEO, MEO, LEO, and then your role in 5G. So let's just say we're not bored, but I'm also pretty excited about everything we're doing there, because everything we're doing is relevant as far as our research development and the legacy work that we've done in the past.
Okay, so turning now to the health division, can you just at the high level talk about or provide insights on how Calian, how you're looking to expand into the healthcare segment beyond Canada? Obviously, you've done a great job within the Canadian market. How can you leverage that south of the border and into Europe?
Yeah, no, great question. I think for us right now, it's interesting. We think we still have lots of room to grow domestically. And if you saw even our last quarter, our health business, 57% growth, over 28% of that was organic. So we still have lots of domestic opportunities here from a Canadian perspective. But to your point, we're not resting on our laurels there. We're looking at US and European markets. And where we are today is interesting. We have customers, and specifically around our patient support program work that we're doing with our Alio All-Phase acquisition. We have customers working with us now asking us, because they're happy with the service here, can we support them in Europe? Can we support them in the US? So we literally have trials running today in Europe across 6 or 7 different countries, as well in the US, and actually extending into Mexico. So the good news is we're going to expand based on customer demand and customers asking us to go with them, and we'll be able to walk before we run. And that's really important to us, because healthcare, as you can imagine, is something that's critical to our customers. There's a lot of regulations and rules in each country. So you can't just kind of go crashing in. You've got to literally walk before we run. And what I'm excited about when I talk to Gordon, who runs our health business, is that we're getting our customers asking us to basically specifically place capability in certain countries. So we're able to focus our attention on how best to enter and support and deliver, keeping up consistent quality delivery in each of those areas. So it's happening organically as we speak. And I'm expecting that to continue to grow over the next, over the next foreseeable future for sure.
So you brought up the PSP programs and specifically mentioned Europe. I was going to get to that one, but I'll get to that now.
Okay.
Obviously, I know we now understand why you chose Europe, because your customers chose it for you. Mm-hmm. When you're going to these markets, obviously your customers brought you there, but your ability to grow beyond your customers, what's been your observations around the competitive landscape in the various markets you enter into? Do you think you bring a competitive advantage?
Yeah, I think we do, and I think it really comes in a few different areas. Number one is, we've got years of support business under our belt. So we've got processes, mature processes, tools in our patient support programs. We have a software engine called Health Outcomes Management Engine that really helps us ensure workflow between the patient, the pharma, the relevant players in the PSP program. So we've been able to build up, mature processes, tools, and technology to wherever we're delivering allows us to do so at a very price competitive point. So I think let's just start there. The second thing is when you bring the pedigree of Calian, frankly, we're diverse, but between advanced technologies, IT learning, and healthcare, if you look at the mandates our customer give us, we're very much versed in programs that can't fail, whether it's real-time connections to satellites, whether it's healthcare for the military, whether it's learning and training people to get ready to go deploy for military purposes. Part of our DNA is sometimes I forget is the mission criticality of what we do. So we bring that to our customers, and we can talk to customers about, hey, we can help you on your healthcare journey, but we can also talk to us about your learning challenges. Talk to us about your IT, your cyber challenges. Talk to us about your advanced technology. So we can start taking the diversity of Calian and improving our value proposition by the fact we can not just do one thing well, we can do many things well, and many customers, it's starting to resonate as they understand the broader portfolio of Calian, and that's pretty unique to us, that we can bring in, a few different pieces of this Calian puzzle to really become their delivery partner wherever they operate in the world.
Okay, and then coming back to back to Canada here, yep. The primacy footprint that you have with Loblaws certainly been very successful thus far. I believe you're in 150 Loblaw locations. Correct me if I'm wrong. I think there's about 2,000 locations across Canada. Obviously, there's lots of growth opportunity within that relationship on that front alone. Is that something that is priority here? Is that something that is available to you?
Well, it's, we obviously value our relationship with Loblaw, and we appreciate their confidence in us in the context of helping them run their primacy, their in-clinic program for the Loblaw stores. Since they've merged with obviously the Shoppers Drug Mart acquisition, it's obviously a bigger portfolio to your point, and there's a mix of in-source and our support for them on their health journey. Clearly, Loblaw continues to invest in their healthcare footprint. If you look at their investments, whether it's in QHR acquisition and Well Health. So we will work with them and continue to work with them to find how we can add value, whether it's on the clinic programs themselves, whether it's even on the Shoppers Drug Mart patient support programs that they run. We're trying to now elevate our discussion with Loblaws, and not only on the clinic program, but on the broader healthcare journey they're on. And it's pretty fascinating to watch. So I would say the clinic program, it's really Loblaw that determines, the pace of the clinics, the growth of the clinics, and we support them. So we support them. It's not really our say to say, should 150 clinics be 170? It's really Loblaw that makes that choice. But what we're looking for now, and I think what we do have is, with all the different moving parts of Calian Health, opportunities to help their broader healthcare strategy. And we're literally trying to initiate those discussions daily with them to see how we can be a healthcare partner in a great organization.
Okay. Now you mentioned, if I heard you, QHR and Well Health, which leads me to my next question. In your recent Dapasoft acquisition, correct me if I'm wrong, but I did see mention of a small virtual care component, which makes me think about telehealth.
Yeah.
And so can you highlight for us what exactly is that little asset, and what exactly are you planning to do with it given the competitive landscape that's out there right now?
Yeah, and a good question. And I think for us, when you look at that area, the virtual care, it's such a broad term. I'm going to use a recent Deloitte study to help kind of compartmentalize my answer here. With regard to, patient engagement and connectivity, the collaborative care and coordination, the care delivery and continuum of care, we really support the first two of those, which is the patient engagement and connectivity, as well as the collaborative care and consultation. So our platform right now allows people, and we're doing pilots right now with numerous organizations and actually being implemented in numerous organizations. And one, for example, was an emergency room that wanted a virtual care platform because they didn't want people coming to the emergency room, overloading the waiting room type thing. So how do you do that in a virtual environment? So the pilot we ran with them, with our Corolder virtual care platform, was to allow them to have virtual access. So people could book appointments, they could go into a virtual waiting room, we could basically conduct the appointments, and then the integration engine we have allows the data to be integrated securely with other healthcare systems that the organization has. So that's where we kind of shine right now. And to be honest, the feedback we're getting has been very positive. In that pilot specifically, I think the numbers were over 90% of people saved themselves going into a virtual to the emergency room, and were able to conduct that virtual experience effectively with that platform. And we're pretty excited by that. So that's where we want to continue to focus is to have that option for our customers, whether it's in-person, virtual care. We want to make sure we have a full suite of healthcare offerings, as well as ensuring that it's being done securely. And that's where we want to continue to differentiate moving forward.
Okay. And then looking at, obviously, government and government relationships is an important part of your business, and healthcare is equally important part. Can you talk about the government health contracts in general, and whether you're seeing competition stepping in? I know that Dialogue, when it recently IPO'd, it's been talking about going into the government space, I think to offer EAP type programs and the likes. Are you seeing more competition against some of your government contracts?
I'm not sure I'd say I'd categorize it as seeing more. We definitely have, kind of a core competitor list that we kind of run into most times on government procurement. I think over the long term, as people look to expand, definitely we potentially could see more competition. But the government business, it's not something you just jump into. Like we invest in, I think it's almost 10 people now that do nothing but facilitate government proposals every day. It's a process. There's compliancy. There's point rating. It takes time to learn the government process and get in. I think we're experts at it because we've been doing it for so long. And that being said, even with organizations such as Dialogue and that, I think we actually see potential partnering opportunities for government business as well, because what they do and what we do is not necessarily the same. And I think we could complement each other for a broader program mandate for government. So yes, the co-opetition mindset will probably be there. We'll probably compete with some of them. We'll partner with some, but we still feel pretty confident. Even as of today, we are still getting a lot of calls from our government customers for support, definitely around COVID, and then also northern nursing, northern capability that we've been very successful at providing.
Okay, and you mentioned the word COVID. I think you guys play some sort of role from a testing perspective.
Right.
What about on the vaccine rollouts? What's your involvement on that front? And then what sort of involvement do you think you could maybe participate in when it comes to the idea of vaccine passports? Is that something that is an area for you guys down the road?
Well, initially, definitely to your point, we've been supporting testing. We've been supporting different elements as this whole, who would have known, 12, 13 months into this, so we're still dealing with it. And I think we're all at the end of our rope here, but at the end of the day, it's created a unique opportunity for us. We've been able to use our national footprint here in Canada to help organizations wherever they may be, whether it's up in Nunavut, whether it's in Alberta, whether it's in Ontario. So we're getting calls, frankly, across our national network for sure for support. In regard to what started this testing is now discussions around vaccination support. Definitely in Ontario, we continue to have discussions there. Other organizations as well, as they start thinking about vaccine capability and rollouts. So those discussions and mandates are happening literally daily. So we expect for the next foreseeable future, we will see continued market expansion, just both on supporting capacity to deal with either vaccinations or testing. And what I'm excited about longer term is creating a bunch of new customers to us, people that I think even past COVID will be able to support in some shape or form. So it's been a great opportunity for us to show what we can do at a national level, and as well create those relationships that I think will be more longer term than short term, just to the nature of healthcare.
Okay, and so now we'll move on to the learning segment.
Mhm.
I mean, this is a general statement, but it seems to have applied specifically on the learning side. You guys did, obviously, with the onset of COVID, did a great job of transitioning to remote a remote work model. Definitely highlighted in your learning segment. Generally speaking, and certainly within the learning segment, is this something that you guys look to take more advantage of down the road when it comes to working remotely as we come out of the pandemic? And is that or maybe is it something that works best for certain segments of your business, and the learning aspect is probably one of the better examples?
Yeah, I think it's interesting. To your point, we literally had to pivot, working with our key customers like National Defense, into a virtual platform when most of the training had been done in person. So my credit to our team, but also our customers, and in this case, D&D, or some of our other larger customers, who have basically been working with us to do that, to ensure that they didn't fall behind on their learning requirements and their training requirements. Going forward, I think, frankly, for us, we really want to have a balance. We believe that it's in the same in healthcare, frankly, Nick, is we believe there's going to be a balance of virtual and in person. I would say, as a medical, if you think about the healthcare industry, at some point, somebody needs to touch you and do some diagnostics. You can do so much in a virtual setting. And I think in learning is the same. You can teach people how to do things virtually. There's definitely better tools, better capability, and we're looking to expand our capabilities from the technical aspects of that. But at some point, like a military exercise where you have hundreds of people and thousands of people coming in, we still deploy physically. So you want to have an ability to run through rehearsals in a physical environment. So we believe that the combination of the two, that as Calian, we got to make sure that we're thought leaders in both virtual, in-person learning, virtual, in-person healthcare. You think about IT. So I think it's going to run through everything that we do, frankly. And we're going to get ready to make sure we're able to handle that customer requirement in whatever manner they prefer or see the opportunity to, as far as the delivery model they're looking for. So that's how we're moving forward. We want to be relevant in both elements, and we think, frankly, the world will settle down here into both elements moving forward.
Okay, and then again, sitting on the learning aspect of the business, this idea is that as we come out of the pandemic, potentially moving to more and more of a hybrid working environment, that does that open up new opportunities for you from a learning perspective, military aside, of course? Just speaking to the virtual side of the business, does it raise new challenges? Is it more of a headwind, tailwind? I would assume it's more of a tailwind, but I'm curious on your thoughts there. And then at the same time, one thing that also struck me was, having followed HR software platforms, I know the former Halogen is in your backyard.
Right.
There's the Chabo that's very much involved in the learning or the LMS market. Is partnering with an HR software provider or an LMS company something that you have considered or are considering as a means to drive further learning revenues?
Yeah, and so for both, let me start with that first question. With the COVID, post-COVID, and as you said, those learning platforms, and where are we going here? There's no question in my mind that the work. It's interesting, that our learning business now, with our European footprint, Canada, looking at the US, we do believe that organizations are recognizing the requirement through COVID to have their business continuity plans really up on the shelf, not just on a shelf, but exercised. And when you think about our learning business, and specifically our emergency management business, where we help organizations And we've been doing it primarily for defense organizations and critical infrastructure organizations like nuclear, where we've helped them rehearse their business continuity plan, rehearse dealing with incidents. We expect there's going to be increased demand for that type of service coming out of COVID, because I think a lot of people, in the past would think about terrorism, they think about natural disasters, but now we add global pandemics to that list. And I think, frankly, that organizations will continue to come to Calian and say, look, we're just not comfortable that the document's going to do it. We want to run through an exercise, either virtually or we want to do it in person. So we think, frankly, that's going to be an opportunity for us. And we're seeing people come to us now, municipalities, provinces, critical infrastructure, private corporations. So we believe that's going to be a tailwind definitely going forward post-COVID. And with regard to, the HR platforms and the learning platforms, we definitely will partner with an LMS. We don't have an LMS per se for Calian. We support whatever the customer is using for their LMS, and we're trying to be agnostic that way, that regardless of your learning management system, we can help you in the content and the delivery of those learning management programs. So, but yes, absolutely, whether it's the companies you've mentioned, the HR platforms, I think as our brand gets stronger, because I'm seeing that our brand is getting stronger in every one of our segments. We are now getting sought out as a learning company, as a healthcare company, and I think that's the fundamental difference since I've taken over CEO over the last 2-3 years. Is now, oh, Calian, yes, I got to talk to them about my learning capability or partnering them on a learning opportunity. I literally had a call this morning with my team in Europe. There's a company that wants to talk to us about European partnering, and we weren't even on their radar 2 years ago. And all of a sudden, the Calian learning brand is getting very strong in Europe. So I think that's going to create some interesting discussions just generically and organically over the next couple of years for sure.
Yeah. So switching now to the IT and I know cybersecurity segment, obviously, and you will acknowledge this, that there was a long pause, might not be the right word, but certainly a long gap between IT acquisitions, and then the Dapasoft came along. Was it a case of coincidental that we had this 2-year gap? Was it by design because you were focusing in other areas of the market, or is it are you indicating to the market that IT is now back at the forefront? Is not the right word, but at least a critical pillar, and the fact that cybersecurity is part of that mix. Certainly, there's some good industry trends on that perspective, or is it a function of, because you're seeing emerging opportunities, cybersecurity being one of those, you kind of brought it back to being a critical area of the company, whereas maybe for the last 2 years the focus was on other parts?
Yeah, I think for us, anyone that knows me hears me tell the story that I have 4 kids at home and 4 kids at the office, right? I have 4 segments and I have 4 boys at home. The reality is I'm as excited about those 4 segments. All 4 segments I think have opportunities to grow profitably. And working with Sandra and the IT group specifically, we've been very patient trying to find the right acquisition. We did a tuck under last year, a company called MSEC in June last year, which was more on that, it's strengthening some of our cyber offerings. But we have been really, combing through IT services, IT product capability for literally 18 months after we did the security acquisition, as you pointed out 2 years ago. So it wasn't that it wasn't a focus. It was really, we're trying to ensure that when we acquire companies, it aligns to our strategy and the valuation and multiple expectations are realistic. So frankly, I think we could have overspent on a numerous bunch of IT services companies and IT product companies in that period that you mentioned, Nick. You called it the gap, right? So we're trying to make sure that as we look at these acquisitions, that culturally align, it's the right valuation, we're not getting caught in market hype, and that they're really resolving our strategic goals as a company. And frankly, it took us a bit longer in IT, but I don't want anyone thinking for any reason that we're not as excited about IT. We're just really trying to be a mature acquirer in that capability. And now that we have Dapasoft done, you think about it, our IT business now moves in that $90 to $100 million range. that's going to continue to push, and I think it's only going to continue to continue to grow as I look at growing each of our segments. So we're still excited as we were years ago with IT, and to your point, it took a bit of time, but I think hopefully our investors understand it's not because of lack of trying, it's because really trying to be prudent on our acquisition criteria and not just buying to buy. We want to buy when it's the right company.
Fair. So then I think part of your plan is to diversify more into IT services and the mid-market space in general. Is that plan just in Canada, that focus, or are you looking to take that down to the US as you establish or renew that footprint south of the border? And if you are looking to go more into the US, can you talk about, on the IT services side that is, can you talk about the competitive landscape, acknowledging or recognizing the fact that the converged technologies of the world, they seem to have been fairly active in terms of developing, doing a lot of M&A and growing their footprint on IT services south of the border?
Yeah. So for the short term right now, IT services, if you look at Calian, if you think about the revenue coming from our IT services, the majority of that prior to the DataSoft iSecurity acquisition was coming out of Ottawa, frankly. We had a very small footprint in Toronto. And now with DataSoft iSecurity, now we've expanded our footprint. We've gone from 10 people to over 130, 140 people in the Toronto region. And also they have national, customers. So I think in the short term, we still believe there's lots of opportunity to grow domestically. US would probably be an expansion through acquisition by acquisition. But to your point, we want to make sure that we understand what we're getting into. And I'm trying not to swim in lanes that are overcrowded. I'm trying to find ways that we can go in differentiation. The one thing we can do, and cybersecurity is a great example. I can talk to a customer today about business resilience. And what I mean by that is I can talk to them about their physical infrastructure. So would you like to do an exercise? Would you like to look at your business continuity plan? Would you like to actually run a virtual simulation of that? And I can talk to them about their virtual infrastructure and cyber. So I think what we will see is as we enter these markets, the ability for me to lean on those segments in our marketing messaging that we can differentiate, but not the fact that only we do IT cyber, but we can actually help them on their whole business resilience challenge. That's where I think the differentiation will be by leveraging, it's like IT and cyber and healthcare. Well, we can talk about the fact we run healthcare today. We run healthcare today. We run doctors and nurses. We understand the customer challenges with that. I think that's where we can start to differentiate more for pure plays in each of our segments.
Okay. And then just general questions that we have. And this one I thought was interesting. At your recent AGM, you talked about doing a transformative acquisition. I think it was within the next 12 months, might be a little bit longer than that. I guess two questions is, when you talk about transformative, what's your definition of size on that? And more importantly, when you go through your checklist as you evaluate companies, what are the parameters that are most important to you? Culture, IP, geography, verticals, complementary pieces. Just how are you going to evaluate that transformative acquisition?
Yeah, great question. It's interesting. We did our AGM, and I think it was 3 days later we announced the DataSoft acquisition. So from my viewpoint, that was transformative for sure in the context not only our largest acquisition, but you think about what it's done for our IT business. So transformative to me, really, when you look at size right now, if you think about the DataSoft acquisition, 50 million, 80 million potential size as far as the valuation of that deal, I think that's still transformative to Calian's mind. Would we look at larger ones, 100 and 150? Maybe, but frankly, we've gone from 5 million to 10 million to 25 million. So I think we're learning as we go. And I think that's prudent that we don't, bet the farm on something coming out of the blocks, that we're doing this. We're continuing to evolve our playbook. We're getting better. We're understanding integration of acquisition. So I would say that DataSoft type size, it makes sense for us. And yes, we look at maybe a bit larger, but I don't think we're ready for too large ups, because I just don't want to take that risk. And then as far as the criteria for it, you nailed a few of them, frankly. We really have in our playbook 3 lenses. We look at these financially. What is the financial track record of the company? We're looking to buy profitable companies. We've done 77 consecutive profitable quarters. We're not really looking for fix-me-uppers. And we get a lot of companies come across the door that haven't really been profitable, haven't really grown, but it's the magic. As soon as we buy them, there's going to be this hockey stick of growth and everything's going to be rainbows and unicorns. Like, we understand that that is not necessarily true, and that's why we use earnout. So financially needs to make sense from our company performance, and then the valuation on the multiple. The second lens is strategic fit. Each of our business units and our segments, we go through an extensive business planning, strategic planning cycle. We talk about Horizon 1, Horizon 2, Horizon 3, and what we want to be as a company in 3 to 5 years out, and looking at how we then have acquisitions support that strategy. So how does this company strategically align to our strategy, so that we just don't have acquisitions being our strategy, they're supporting our strategy. And the third element is cultural fit. To your point, that takes time. You got to spend time with the owner. I always say the owners, the CEOs, the leaders of a company are responsible for vision, pace, and culture. And when you meet with people, and you can probably attest to this in your own experience, Nick, because you do a lot of this with meeting companies. When you meet a CEO or a CFO or the management team, it doesn't take long. You start to get a feel for the company. Well, what are these companies? Are they going to fit in with Calian culture and what we do? So we spend time with the management team. It's challenging in a virtual environment, but we're finding workarounds around that. And then finally, we put a risk management risk management lens around that as well. So we continue to evolve the framework, but we found those to be effective lenses. And so far, knock on wood, it's been serving us well as we've executed now since I've been to Calian, 12, 13 acquisitions.
Okay, so I think we've got about 4 minutes left. We'll try to get at least one, maybe two more questions in. When we look at, obviously you've got your 5+5 strategy, and you guys have done a really good job on it. So kudos there. You've done a really good job on the organic growth side of things, generally speaking. In Q1, fiscal Q1, it looked like you dipped below the 5% level. Should we just look at that as a blip, or was that, or was there more of a something of a greater secular trend happening there that would have caused that?
Yeah, I appreciate that, and you're right. Since I've taken over as CEO of the company, I've really tried to put this 10% growth element together, which is 5% organic, 5% M&A. And I think you can appreciate in any given quarter, every given month, any given year, they're going to be up. If you look at last year where we had 26% growth, 21% of that was organic. So you're going to see this kind of blip in and out, as you said, as you go through it, even in a low organic growth consolidated level. If you look at our healthcare business at 57% growth, 28% of that was growth organically in healthcare. So it's a good reminder for me as we talk to our analysts and to the markets, that we kind of delineate consolidated growth and then what's going on in each of our segments, because at any given time you're going to see that M&A growth up, organic growth up and down. But the thesis I'm working on is collectively, how do we consistently grow this company at 10%, leveraging both organic and M&A? And to your point, in any given quarter, those may be up and down, but I think the trajectory has shown since I've taken over, it's been 10, 11%, 13%, 20%, and last year 21% growth organically. So you're going to see that mix kind of change over the period of time. But the goal is, as a minimum, the 10% growth is really the thesis where I'm trying to run this company on.
Okay, and I'll squeeze one more in here. I guess as you've been CEO of the company for a while, and you've taken it through a nice transition, or at least growth phase, and so again, congrats on that. Where you are today, when you look back, when you look at where you're going, how comfortable are you that the market truly understands the story and the narrative you're trying to convey? Or do you feel there's a piece of the business that's not being either misunderstood or not well understood?
It's been a journey. When you have a diverse company, I think about when I started as CEO. We had one analyst. I remember when I opened the Toronto Stock Exchange, and Francis asked me, "You've been in business 30 some odd years, so how come I've never heard of you guys?" It was a reminder to me on how much work I had to do with regard to working on getting Calian established as a brand, frankly, but then understanding how we have a diverse company going to market and the valuation or the value of that to an investor, to our customers. The one thing that I did last year in our fiscal year was broke out the company into 4 segments. We used to have the 2 divisions. I broke it out into 4 segments of advanced tech, IT, healthcare, and learning. And the feedback I've been getting, and frankly, even and I read some of your questions, Nick, it really showed me that people are slowly catching on to what each of those segments is doing through repeated communications, repeated investor relations. So I think right now, I think it's better. I think we still have work to do to have people understand the scope of everything we do in the context of the 4 segments and the opportunity within those segments. But I think it's better. And I think going forward, when you ask that question, I think it's a great question. I think what people don't necessarily understand yet is, what are the convergence opportunities? So when can you do IT and healthcare? When do those come together? And actually, what is that? How does that help Calian get to be $1 billion company? So as people have been trying to get their head around the 4 segments, I think what the next round of questions will be, well, hold on here. Can you do learning and healthcare? Can you do advanced tech and learning? Like, how do you connect those dots so that customers don't see us as a 4? It's like I tell people, when you go into a car dealership, you don't know how they're organized. I just want a car. So same with Calian. I don't want our customers worrying about how we're organized and how we go to market. If they have a healthcare requirement, talk to us, and we're happy to help them and kind of divorce that whole organizational structure in how we go to market.
I think so. We'll leave it there, but I will say the Dapasoft acquisition certainly helped raise the point around I guess 2 market segments coming together with IT and health. So I guess we're now seeing the next phase of where you're going with the company. So we'll leave it there. Thank you, Kevin, for joining us today. I appreciate the responses to the answers. Stay safe, and hopefully next year we'll do this. We'll do the same fireside chat, but this time in person.
Well, Nick, you know what? I hope so as well. And people that know me have said this virtual thing. Yes, we're getting by, but again, thank you for your time. Thanks for Laurentian to having Calian as part of your agenda. It's very much appreciated as we try and get a story out. So I do appreciate that, Nick. And again, thanks for all the questions, because I know you saw through them. So I know there's a lot of work there for you. So thank you for that as well.
Okay, appreciate it. And so just to remind everyone, we've got Alethea coming up at 4:10. Thank you.